Hi guys, welcome back to our channel. I'm Chidi from the Ultimate Guide Group, your go-to place for all things adulting. So make sure you like this video, subscribe to our channel, and let's get started. So today I'm going to do a video that talks about how it is that landlords can save money. I've had quite a few requests on this in respect of the Instagram page that I have. So if you're not following the Ultimate Guide Group on Instagram or TikTok, make sure you're following us there. I'll leave the links to each of those pages in the description box down below. But a lot of people are asking how it is that they can save money as a landlord or landlady. And then also I had a brunch, and a lot of the conversations and questions that happened during that brunch were in relation to property, in particular in this high inflation, high interest rate, cost of living crisis, recession market, how it is that landlords and landladies can save money. I wanted to run through 9 ways that you could save some money as a landlord or landlady. Okay, quick disclaimer, I am not a professional tax advisor. I am not somebody who's trying to make sure that you avoid tax or anything like that. If you need a professional, please go and seek professional help. I am a lawyer, but I'm not your lawyer. So if there's anything that you have in terms of legal issues or legal requests, please go and send that to somebody who is appointed specifically to advise you on your circumstances that is a professional. Number 1, assign your beneficial interest to either a spouse or a partner, or enter into joint ownership. When you do that, you can benefit from the tax allowance of your spouse or partner, and also if you're in a joint ownership, you are able to benefit from the tax allowance with your joint owner. You also benefit from their capital gains tax allowance if you decide to sell or dispose of the asset. And you can essentially decide how it is that you want to share, in essence, what works for you and your tax allowance. Your spouse or partner, or even the joint owner, doesn't need to be the legal owner of the property. They can just be a beneficial owner. But to note, there are obviously still risks. So while you reduce your income tax allowance, you may end up incurring some other taxes as a result. If you want me to go into further detail about the taxes that you may end up incurring as a result of using this strategy or this route, then leave it in the comments down below. But with taxes, obviously seek a professional and make sure that it works for you in your particular circumstances. Number 2, you can transfer your property into a limited company. And that was one of the things actually that I was thinking about doing when I bought my property in my personal name, and I was thinking about transferring it into a limited company. I ended up talking to quite a few people, in particular professionals in the industry, and they said that ultimately I just needed to take that L and move on to the next property. So now I've set up my company, I'm able to buy any additional investment properties within that company. You'll pay corporation tax, which is less than high net worth individual taxes. Companies can deduct their rental income against their mortgage interest payments. So if, for example, your rent is £1,000 and your interest that you pay on your mortgage is £800, that means that delta, that £200, is all that you pay tax on. And then once you've paid your corporation tax, it's the fact that you can deduct your rental income and mortgage payments to reduce your tax bill. You can then distribute any income as dividends as a director of the company, and your dividends are taxed lower than your income in any case. However, stamp duty is still a consideration. So when you transfer the property from your name into the company's name, there'll be stamp duty payable. And there's also capital gains tax as well from your perspective, because you've gained additional capital by virtue of selling the property. And so that may also accrue or incur a tax liability. Number 3, you can offset some of your expenses against your rental income. And I'll leave a link down below of all of the allowable expenses that HMRC allows you to deduct in relation to your income. So if you receive £2,000 of income per month, you can deduct a number of different expenses to reduce the amount that is actually taxed by the government on that rental income. So that can include a home office, repairs to the property, rates such as water or council taxes, management agent fees, letting agent fees, any sort of things that relates to the property can be used as expenses that deducts against your rental income. Number 4, you can also carry over losses from previous years. So if there's an instance where you spent a lot of money kind of renovating the property and now you're just starting to make income from it, you can use those amounts you paid to renovate the property and to buy materials and to pay laborers to offset against other years. And I'm not sure what the cutoff is. Again, do seek a tax professional or an accountant to explain exactly how it is that you can do that. And ultimately, if you spent £10,000 on your renovation, you can use that against the amount that you may make in a year for a house that you rent. So that if your rental income for the year is £20,000, you have £10,000 of those renovation costs that you can in essence offset. So you only then are paying taxes on the £10,000 versus the £20,000. Number 5, you may decide to consider short-term let. So if there's any instance or any time where there may be void periods periods where the property is not currently let. You can then use sites such as Airbnb, such as Facebook Marketplace, such as Spare Room to market that property before the new tenant moves in, so that you're working out how it is that you can incur or you can accrue some income to help pay for those void periods. Number 6 is consider reducing your tax liability by extending your property. There are a little bit more flexible rules and regulations as it relates to extending your property, and so you can then include like an annex or an additional room or an additional bathroom that in essence pushes up the price that you can charge for your rental property, and then hopefully increases the income that you make from the rental property. Number 7, and this is obviously in specific examples, you as a landlord can claim private residence relief. That is only when it is that you're living in the property that your tenant is also living in, and it needs to be considered as your main or only home and residence. Again, this is in very particular circumstances. The majority of investors don't live in the property with the tenant. But in instances where you are living with your tenant, you may be able to claim private residence relief. Number 8, you can also think about remortgaging your property often. Make sure you're keeping your thumb on the market and working out if there have been increases or decreases to the housing market that may work to your benefit. You may want to remortgage and pull equity out, which will allow you to invest in other properties and increase your income or increase your portfolio, and so as a result increase your income per month. That may be something that might be helpful, because you can look to different lenders, specialist lenders, and then also take advantage of a kind of increase in the housing market. For example, what happened during the stamp duty holiday in 2020 may have been beneficial for you to remortgage, pull money out, and then put money into another investment property that will allow you to increase your income on a portfolio basis. And then last but not least, number 9 is manage the property yourself, and if you need to do any works, do that yourself. That wouldn't work for me. My job is way too stressful. I cannot manage the property at all, and so I'm happy to give the £80 per month to the management agent that deals with everything. I'm also happy to let them find a tenant for me, and if you didn't want to pay that amount, you could reduce the amount that you're paying and your expenses, and so as a result increase your income. But you want to make sure that that works for you. Alright guys, so that's it. That's the 9 tips that I would give to landlords and landladies if they're looking to reduce firstly their tax liability and also to increase their income. If there are any others that I've missed, and then if there's anything else that you're interested in, please do also leave them in the comment section down below. Alright guys, that's it. I'll see you in the next video. Thanks so much. Bye.